Hello guys, in my today's video, I'm going to discuss about Yatharth Hospital Limited. So we are mainly going to go through their con call summary and what the management said about the current results and what are their prospects. And before we get into that, I'll just take a few seconds in explaining their business model. So if you look at this company, it's a leading super specialty healthcare provider in the Delhi NCR region. So they mainly operate out of that region. And if we look at their revenue, so 89% of their revenue comes from inpatient department and around 11% of their revenue comes from the outpatient department. So what is the difference between the inpatient and the outpatient? So inpatient are the people who go to the hospital, who stay in the hospital for more than a day or two and get their treatment and come back. Outpatient department is the department where the people who are not well, they just come for consultation and then they take the advice of the doctor or take the prescription and then go back. So one of the most important thing is a hospital earns more from IPD compared to OPD. So if you look at their the revenue breakup, 89% of their revenue comes from the IPD department, which is quite good for them. And if you look at their specialty mix, because as I said, right, they are a super specialty provider, and the more they provide special services, the more they have a higher revenue and more margins on it. So if you look at their specialty mix, so the revenue is diversified across cardiology, neurosciences, nephrology, oncology, and orthopedics. And one thing the management said that oncology is a very, very fast growing segment, which now contributes to almost 10% of the overall revenue for the groups. Imagine only one single department contributing to the almost 10% of the overall revenue. If you look at the results, the revenue increased in quarter three by almost 46% to 320 crores, and PAT was up by almost 49% to 43.1 crores. And the management gave the occupancy number, and that is very important because the more the beds are occupied, the more revenue hospital earns, right? So if you look at the overall occupancy across the group, it is around 67%. And if we divide as per the regions, Noida had around 91%, Greater Noida around 74%, Noida Extension around 61%, and their Jhansi Orcha branch at around 72% occupancy rate. And if we look at their AROPV, I mean, I know it's a very fancy word, but the full form is average revenue per occupied bed. So it has increased 10% YOY. So right now it is comes up to around 33,000 rupees. And the management also said that this quarter was their highest ever quarterly revenue and profitability. And one of the other thing that they highlighted, which was very important and which really helped in this quarter is, right, so they had recently acquired scaled up by building getting two new hospitals in New Delhi and Faridabad Sector 20 hospital. So even though they are very and fairly quite new hospital, they almost contributed to 9% of the of the revenue for the full quarter. And when they divide it between the monthly run rate, Faridabad, the hospital contributes around 7 to 8 crores per month, and the New Delhi hospital contributes to around has a run rate of around 5 crores per month. And the other thing that the management said it's very important is like most of their revenue for these hospitals are coming from cash and third party agency, which means the private insurance. So, and they're not that much dependent upon the revenue which comes from the government side. So, and if you look at the average revenue per occupied bed for the New Delhi, it was around 48K, and for the Faridabad, it was around 36K, which is, if you actually see from the average, which I told about for the whole group, which is around 33,000, it is quite higher. So let's look at the questions which were asked to the management and how did they answer, right? So the first question, one of the first question came on the revenue mix. So the hospital earns revenue from, as I said, from cash, third party agency, which is the the insurance companies, and 35 and from the government side, all the government insurance companies and the contracts that they have with them. So currently 35% of the revenue comes from the government side, and the remaining remaining around 65% comes from the cash and private insurance. And the further question that people ask is like, if we take the the private side, how much it is between the corporate and between the people who individually pay for it. So the breakup in that was around 60% is corporate and 40% is private. And the other thing the management is trying to do is right to reduce the dependence on the government revenue. So currently it is 35%. In the next 2 to 2.5 years, they're planning to bring it down to 25 to 28% of the overall revenue, so that the dependence on the government revenue is on less. And on the EBITDA, they confirm that the margin is around 24 to 25%, and they will try to maintain that. And the net cash on balance sheet is around 200 crores. And they had recently acquired a hospital in Agra. So one of the questions was like, why such a huge cost was paid to this Agra hospital when it could be an acquired, other hospital could be acquired for very less. So the management, told that this is the best infrastructure hospital, uh, in Agra, and within the 100-kilometer radius, there is no hospital which comes closer to it. And in fact, it's a super specialty hospital, and it has all the machines already, like, including MRI, cath lab, and on top of that, even if they want to expand this hospital in future, they have a space for that. And another question which came from the analyst was related to competition. And management was quite confident about the competition. And they said, yes, they know the competition in there. And management said they welcome it. And the reason that they gave is like when the competition comes, territory gets developed. So what happens, more and more patient comes and more they come. And because of that, the catchment chances of increases. So the more and more, the patients are coming in and around the area, they will know about this hospital, and they will know what are the services that they provided. And they are very confident that even at the back of this, they will get more patients. And the other reason they are so confident is like, even with all the competition currently they have, they're still growing at the rate of around 25%, and they don't see it coming down at all. And regarding expansion, the questions were asked, and this is the update that the company had given. So what they told about the Agra hospital, that has been fully integrated to the company's network from Feb 1, 2026, and it's fully operational. And what they are saying is like, with this Jewar Airport, which is expected to be operational soon, they feel that a lot of people from outside will travel, to come to this hospital, and the occupancy rate will definitely be increased. Currently, their main focus is on wrapping up the facilities in the New Delhi and the Faridabad hospital and the Agra hospital. And they want to ensure that they become mature in the coming months and years, and provide even more efficiently to the overall revenue. As of now, the hospital has a overall capacity of around 2,550 beds, and the management is saying that they plan to add around 3,000 beds, to take the total count to around 5,000 to 6,000 bed in the next 3 years. So they're almost trying to, double the capacity in the next 3 years. And the capex management told about that they will incur is around 1,500 crores. And what they said is majority of this expansion and the beds will come through acquisition. And this the capex will be, how to say, will be funded through debt and cash. And the other thing which management said, that while expanding this, that their focus will be on the super specialty services versus the normal services. And the main reason is why, because even though the number of patients would be less, the revenue and the margins are quite higher on that. And the management said that they foresee that on an average, the average revenue per occupied bed will increase 10% year on year. So if we look at this hospital, they did their IPO recently in 2023. So they are doing quite well, and they are confident to almost like, double their capacity in the next 3 years. And they are running quite efficiently. Even their new hospital, which was in New Delhi and Faridabad, are doing quite well. And they how to say, they foresee very good things from the Agra hospital. So we just have to continue monitor and see how does it go, and whether they are able to double their capacity, and how does it impact their overall balance sheet and their revenue. So I'll keep you posted on this. Thank you for watching my video. Thank you, and God bless you.